please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. It's a Friday morning. I'm Prashant Nair. With me is my colleague Surabhi Upadhyay, who is joining us from Delhi. Surabhi, hi, morning.
Good morning, Prashanta. Well, what to say? I guess the bulls are going to be saying, thank God it's Friday, because after a huge drubbing for most of this week, there's some respite on the screen as of now. But I guess the question is, how long is it going to last, Prashant?
Absolutely, Surabhi. But, you know, it's good to see the week being wrapped out like this. But I think I completely agree with you. The fact is, you look at the advanced decline. I mean, it just strikes me that the Nifty is up almost 100 points and the broader market breadth is almost evenly matched, which means there are equal number of stocks which are falling as they are, which are actually rising. So this is a very concentrated large cap kind of move that we are seeing, and it's not kind of a broader move upwards that one would like to see. And so the concentration is on your screen. Reliance is adding, Reliance, ICICI Bank, between them are adding about what, 40 odd points out of this 90-point move. So I think in a way you throw in an ITC and an Axis Bank that is about 60 odd points, right? So it is a concentrated move higher coming through on large caps, but for what it's worth, it's good to see. I mean, the market up and about. Global cues have been pretty supportive. I mean, overnight, the day before yesterday, when we were not trading, I mean, you know, the US markets have been looking good. The other big factor, which I think is supportive, is that dollar has been on the back foot. People are scratching their heads and wondering, data continues to be strong, but why isn't it that the dollar is rising? And so that is good news, which means that over the last 2 or 3 days now, emerging market currencies have actually been rising, and that's a good alignment to be in, generally speaking. And second, oil prices, I mean, they're not sort of crossed. They're around that $78, $79 odd dollars, middling around, have not really taken up that mark convincingly. Of course, there's Mr. Trump threatening the Middle East for high oil prices and asking them to bring it lower and that sort of thing as well. So maybe, I mean, WTI stays around the 70 odd mark, in Brent at this about 78 odd mark so far. So that's where we are at. Surabhi.
Oh, absolutely. And then there is a story called Yes Bank. That stock still waiting to find buyers. 20% down is what we've got. In fact, you will hear more commentary on Yes Bank. The question is, who is going to be the first to catch this falling knife? We'll get you some more perspective on that as we go along. But first, more up on the market. And, of course, a couple of trading ideas as well. We have Mitesh Thakkar joining in. Mitesh, good to talk to you. Good morning to you. So the question is this. I mean, as Prashant and I have been discussing, it's been a bit of a feeble comeback by the bulls right now. Breadth is narrow. You have select large cap stocks, the banks, RIL, that are pushing things higher. On the index, what's the call for the moment? And, of course, individual stock ideas.
So, I think, so the idea is that we have kind of held on to 11,200. It was the gap level for the Nifty. And the Bank Nifty rebounded slightly, earlier than hitting the support levels of 26,200. But looks like a bounce back to me, not a reversal in full-fledged sense. So I think around 11,380, 390, you will see Nifty facing a lot of supply. Similarly, 26,700, 750 zone would be very difficult for the Bank Nifty to get past. So my sense is that I think one leg of decline is done, and I think, we are in for some at least next 5 to 6 days of choppy consolidation. The Nifty range could be 11,200 to about 11,380, while Bank Nifty would be 26,150, 200 on the downside, to about 26,700, 750 on the upside.
Mitesh, hi, morning. What would you trade?
Yeah, on the stock side, I have in fact 2 oil and gas related stocks. Oil India is a buy with a stop at 211 for targets of 225, and BPCL I think has given a good gap breakout, so that's a buy with a stop at 366 for targets of 388.
Okay, so those are some of the calls that Mitesh is going with on the oil and gas side for this morning. Thanks, Mitesh. We will keep coming back to you. Right now, let's get some more F&O cues going. We have Krish Subramaniam, co-head equity advisory at Altamount Capital, joining in. Krish, thanks for joining. First up, just your thoughts on the index, on the Nifty or the Bank Nifty. Would you at all look at shorting the small bounce, or would you look at riding it on the upside?
Yes, Subi, I think today's move, I would probably think more of some sort of a bounce back after the vicious correction that we have seen in the last few sessions. But I prefer to do the option play, wherein we're recommending buying of doing a bear spread in Nifty, wherein one could buy a 11,300 strike put and sell a 11,150 strike put. So the net cost comes to about 33, but the eventuality of the downtrend, presuming you end up making almost 117 points. So that in terms of risk reward, I would probably play this for the downside. Also, one could keep a stop loss of maybe around 10. I think we have seen some bounce, but odds are high that we could see the resumption of the downtrend coming out very soon. And stock specific, the NBFCs are also showing some sort of a bounce. But again, I think downtrend could resume. So recommending buying of a 150 strike put in L&T Finance. That's quoting at around 3 rupees, keeping a target of 6. Maybe one could keep a stop loss of 1. And the last one on a bullish bias is a Tata Global. Now, this has shown a lot of resilience, and even that overall downtrend has not exactly participated in the downtrend. So if the going to expiry, I think, and we also seen some delivery-based buying coming about in Tata Global, short covering every now and then. So one could possibly buy 240 strike call. That's quoting at around 250 to 270, keeping a target of 5, and one could also keep a stop loss of 1.
Krish, appreciate you joining in, and thanks very much for your time. Let's, as Surabhi pointed out, get back to talking about Yes Bank. So the stock is down. The key man risk, so as to speak, has come true. Mr. Rana Kapoor, a limited extension from the RBI, and the board is meeting, I think, the coming Tuesday to discuss what to do. Munish Dayal from Bearing Private Equity Partners is joining us to talk about this. Munish, thanks very much. Appreciate your time here. What would you make of this entire situation, top down? So for the bank, what would it mean? And we'll then later maybe talk about whether does the RBI need to disclose more, because investors right now seem to be. We know that Mr. Kapoor is only there for another 4 months or so. But the fear is that there is more than meets the eye. So maybe the RBI needs to tell us more. But start with the bank first, Munish.
Yeah, so Prashant, I think you rightly pointed out it's a mix of two issues. The first one is the key man risk. But to my mind, that's not a new risk, right? Rana started this bank 14 years back. I think over the last 14 years, he's built a very solid bank and has been one of the largest wealth creators in this space. If you just look at standalone the bank today, Yes Bank has one of the best ratios and profitabilities in the country today. So with a NIM of 3.3%, ROA of 1.6%, NPL ratios at 1%, Tier 1 capital at 14%, it's amongst the top few most profitable and high growth banks in the country. So as a franchise, I think it's been an incredible creation of a bank by the promoter, who continues to be a fairly significant shareholder, apart from being the managing director and CEO. Now, really the question is, should he have continued for another 3 years, or it's 2 years, or is it 6 months? And it was an imminent change of management in the bank. Now, maybe the RBI, through its prudence, has accelerated that process. Coming to what could happen next, will the successor be from within the bank? Will it be someone from within the industry? I think the bank itself has a fair bit of bench strength and talent within it. And I think the market itself would have a lot of contenders to run a very strong platform in the private sector bank area. I think the market is reacting to an event due to the uncertainties you pointed out. And the biggest uncertainty has been the way RBI has actually confronted this issue. Is there more on the compliance side and governance side, or is it just that RBI has suddenly woken up to the fact that it needs to play a role in the key management positions in all the banks?
Munish, as a long-time participant in financial markets, Munish, what is your own sense? Someone who's watched the industry over the decades, what's your own sense? I mean, how should investors really see this, what the RBI has done? Some things are unknowable at this stage, right? Is there more hidden which will come out later? That's the fear. But how would you see it if I were to put that question to you?
So, if you put it to me, I think it's a great franchise. I think it's one of the better-run banks in the country. And it's a platform which can be significantly grown and will acquire market share. I think the event should be looked at as an opportunity to get a new management team or an MD and CEO. And at the same time, I think one should acknowledge the work Rana has done in the bank. So I don't see this as a negative for the bank as such. I think just the way it's been done and the timing and the short time frame in which people need to react to this event has taken everyone by surprise. But, you know, for a private sector bank in this country with this capital adequacy and profitability and the franchise itself, which is very high quality and very highly rated by all rating agencies in India and globally, I think it has a good long-term future, and I would, you know, look at it from a long-term perspective at a decent buy to evaluate.
Manish, morning. Surabhi here from the Delhi studios. I take your point, but the question is that the fact that we don't know, the market doesn't know why Mr. Rana Kapoor was forced out by the RBI, is that fact going to weigh over the fact about, you know, superior return ratios, high profitability, etc.? So is this going to continue to impact the stock performance from here on till perhaps, if at all, the RBI decides to make more disclosures? So,
Surabhi, again, you know, the convergence and all the earlier disclosures that the bank had to make based on what the RBI had requested the banks to take provisions on. If the RBI is taking action today on events which have been unfolded in the last 1 year or so, right? I think those have been disclosed to the market, and is this the way RBI is trying to communicate to the market that, listen, if you are in charge of a financial institution and we had to tell you how to disclose your NPA, it's an industry-wide issue. I think every bank in the country was impacted by it, and it would be unfair to isolate Yes Bank. On the other hand, if there is something which the RBI knows more than what has been disclosed to the market, then I think it's very prudent for RBI to get out with those facts.
But Manish, just a quick follow-up on that. I think this issue of divergence, that the manner in which Yes Bank was looking at its loans and the kind of NPAs they were declaring vis-a-vis what the RBI thought should be declared, has wide divergence perhaps led to this? Therefore, could that be a bit of a sticking issue before the stock and shareholders can get back on the recovery journey?
So the divergence issue has been well disclosed, well documented, and the stock and the bank has been adequately punished by the market for it, right? It was at 400, it's at 250. So all I'm trying to say is that's a disclosed issue. Now, if you're saying that the RBI thought X and the bank did Y, and hence we need to punish the person who was running the bank, yes, and then they should communicate that. Now, I guess what the market is always circumspect about is uncertainty. Is there something more which is unknown to the market? Because if what is known and what has already been factored into the numbers and balance sheet and profitability of the bank, it still continues to be the most amongst the most profitable banks in the country. So why fear that?
Okay, Monish, I have a two-part question. Part A, you began by saying that the market is reacting, partly the way it is reacting because of the way the RBI has sort of, the timing of it, the way it has been done, etc. What would you have liked to see from keep the bank aside, from RBI's perspective? I mean, the way how should this have been handled in your view?
Listen, if the RBI has data or information of wrongdoings in the bank, I think through its inspection reports, through its disclosures, it is equally their responsibility to disclose what is wrong in an institution if there is, right? If there is none and they are forcing change in management of the bank due to events which have taken place earlier, I think they should do that and say it, right? Yeah. There's nothing wrong in saying, listen, there was a divergence issue. We believe that's not the right way to handle it. We are not going to reward or allow continuity with management teams who made that happen.
Yeah.
Right? And I think that's fair.
Yeah.
Right?
Fair enough. Fair enough. Monish, just as a disclosure, I mean, do you or your scheme own the stock, Yes Bank? I mean, just...
the fund I work for doesn't. I personally do.
All right, Monish. Thanks very much. Appreciate you joining in with your opinion. Useful and good to hear a balanced perspective on this entire matter. So that is yes. It's still, I mean, some 30-35 rupees off the low. It was down 30% plus at one point. And it's come up and now down a little under 20%. Let's move on from Yes, and we'll revisit the story in various ways through the course of the next 45 minutes. But the other one in focus is United Spirits. It's down 4%, and okay, not 4%, 5.5% now, 531. Nimish is here in the studios with me to tell us what's going on. Nimish, morning.
Hi, morning, Prashant. So, three reasons why the United Spirits stock is down in trade today. First and foremost, the parent Diageo has issued a profit warning yesterday, saying that they will see a 175 million pound of hit on sales because of forex volatility, and close to 40 million to 45 million pounds in terms of EBITDA getting hit, Y2D because of forex volatility. So that is a key reason why the stock is down in trade today. The other reason is, Macquarie wrote a note today morning saying that United Spirits has cut prices of McDonald's #1 by close to 6% in Maharashtra, which means that the EBITDA will be hit by close to 3% for FY19. So that's the second reason why the stock is down, in trade today. The third reason is yesterday there were some reports indicating that in Delhi, both for VAT 69 and Smirnoff, there was a long pending litigation going on. There was a 2-year ban, which is probably going to continue because I guess they've lost the case, and that's going to be the third reason why the stock is under pressure. So clearly, the profit warning is come as a bit of a negative surprise. But the fact that they have to go ahead and cut prices in Maharashtra, that do suggest that there is not only competition heating up, but also some sort of other volume pressures as well. So these are the three reasons why the stock is down in trade today. But I guess the biggest surprise came in terms of profit warning from the parent, which is saying that there will be a 45 million pound of hit because of forex volatility.
The equity market is trying hard to get back to the highs of the day. We're about 20-25 points off that level from the Nifty. By the way, oil marketing companies have been gaining more ground. Most of them are close to the highs of the day. For instance, HPCL is right now clocking a gain of over 3% as we speak. Interesting, because despite President Trump's comments, it's not as if there's been a massive decline in crude oil prices. In fact, if anything, Brent is still hovering around the doorsteps of almost 79. So let's see how the oil market stabilizes as we go forward. Speaking of oil, it is time to get you a whole roundup of the commodity market action, along with, of course, everything that's happening in currencies. Manisha Gupta joins in for that. Good morning, Manisha.
Morning, Surabhi, and thank you so much for that. Well, yes, there's plenty happening in the global markets in sense of events and statements, especially from US, as you rightly pointed out. The US president saying that OPEC should, balance the markets and ensure that the prices stay on the lower side. And it also has to do with the OPEC and the allies meeting in Algeria this Sunday. And then apart from that, there is that India factor to the whole thing, because India, while of course is looking for a waiver, they would want to continue to import from Iran because geographically that works well. Apart from the other Middle East countries like Iraq, Saudi Arabia, etc., where India actually imports quite a bit. But apart from that, there also have been statements on how India may revert back to paying Iran in rupees for oil imports. It really is going to be a couple of next months which are going to be quite volatile for the crude oil prices as we head into that all-important 4th November Iran sanction deadline. But Vandana Hari now joins us to talk more about that. Vandana, hi. First of all, the US president's statements on the OPEC, how have you read that and the impact of that on crude oil prices?
Good afternoon, Manisha. So the latest tweet from Trump obviously grabbed the news headlines. At this point, I have to say I almost feel it's starting to become a bit amusing. Well, crude prices did react, if you can call it that. Crude Brent and TI closed about 30 to 70 cents lower. But compared with the gains we have seen in recent weeks, that's not much of a pullback. Now, obviously, what such a tweet tells the market is that the U.S. is continuing to maintain pressure on the Saudis and OPEC to do whatever they can. And, of course, we've had the U.S. Energy Secretary meeting the Russian and the Saudi energy ministers last week as well, exhorting them to pump more. But, the question is not that. Then there's going to be pressure from other consuming countries on OPEC as well. Nobody wants Brent above 80. But the big question is, has OPEC and Russia, the combined, have they started to run out of steam? Do they actually have spare capacity available? They're already struggling to put the extra 1 million barrels per day that they agreed back in June. Do they have the capacity to make up for a potential shortfall of 1 to 1.5 million barrels per day, or even more?
So, Vandana, isn't that exactly the meeting that is on Sunday in Algeria? I mean, what is your expectation? Will the OPEC and the allies be able to fill that gap?
No. So the meeting, in terms of the actual supply, the meeting doesn't really change anything. The important decision that was taken was the one in Vienna on the 23rd of June, where Russia and Saudi Arabia, effectively, it wasn't the entire OPEC, non-OPEC, agreed that they will try, and whoever has the capacity will be allowed to pump more, up to 1 million barrels per day collective increment in output. What they're going to do in Algeria, what they're expected to do this Sunday, is reallocate, because basically acknowledging that Venezuela, Angola, Mexico cannot meet the target that they had been assigned back in November and December 2016. Sure. But there are some other countries which can increase production to reallocate those quotas. That's not going to make any change in actual barrels in the market. That is already in progress.
It is.
This is just changing things on the paper.
So coming to the India, part of the story as well, where there is an expectation that India will revert to paying Iran in rupees. Also, India may be looking to lock in oil futures to, stem the rupee slide on the other side as well. So in the whole course of action that the global markets are in middle of, how do you see India's reaction to all of this?
So India has already been signaling and telling the U.S. Officials as well that it's reluctant to simply take directions from the U.S., especially since these are unilateral sanctions and not UN sanctions as in the previous round. Some companies, though, those that were not, for whom Iranian crude was not a big part of their basket. Some of the Indian refiners, for whom it's easier to replace, since it was a smaller part of their diet, have stepped back. But the bigger buyers will continue to buy. And as you quite rightly just pointed out, there are some precedents set from the last time, which is, pay in rupees, use other ways to secure shipment insurance and so on. Maybe have Iranian tankers deliver the crude onto Indian shore. So they're going to, the sense I get is they're going to try and do everything they can to not pare back in a big way.
Okay. All right, Vandana, thank you very much for getting us that view. And thanks to Manisha as well for getting us the commodity headlines and everything that oil is doing. And obviously that seems to have a very clear bearing on the rupee. The fact that overall the dollar has been slightly weakish today, a bit on the back foot compared to the levels that we saw earlier in the week. And perhaps this whole talk about some of the dollar demand moving out of the system if India does decide to pay Iran directly in rupees. So maybe that's acting as a bit of a comfort factor, because we've seen a one-week high on the currency, 71.85. So now quickly pulling back from the 72 levels. That's been the story of the morning on the rupee. So